the entire global banking system just quietly wired itself into a single, public decentralized network, and almost nobody noticed. The plumbing that controls every single multi-billion-dollar international transaction was permanently modified, while the retail market was completely blind, distracted by short-term price charts. The messaging network that moves money between more than 11,000 global banks, the absolute backbone of sovereign international finance for over 50 years, known as SWIFT, quietly switched on its production integration with the blockchain world. And the exact middleware engine chosen to route secure transactional messages between these 11,000 financial titans and public-private ledgers is governed by Chainlink. This isn't a pilot program. This isn't a sandbox testing phase. The standard Oracle infrastructure that has been a publicly traded token since 2017 has officially been embedded into the baseline plumbing of the global financial matrix. Chainlink is now sitting directly underneath both the banking infrastructure and the rapidly tokenizing US stock market at the exact same time. My name is Newell. Welcome back to the Signal and Noise podcast. Do me a quick favor right now. Hit that like and subscribe button to keep your capital insulated from the mainstream media's blind spots. Today, we deliver a raw diagnostic breakdown on the invisible architecture. We are going to deconstruct the exact mechanics of SWIFT's live integration, expose Project Pangea, the massive 47-bank alliance transforming foreign exchange settlement, and chart exactly why you do not get to position your capital after the world figures this out. You position before. Let's dive in. Let's strip away the speculative market hype and look directly at the structural plumbing of international capital. For half a century, SWIFT has maintained an absolute monopoly over global bank-to-bank communication, processing tens of millions of daily payment instructions. But behind the scenes, the legacy financial system has been facing an existential crisis: fragmentation. Following extensive pilot programs with institutional giants like UBS, BNY Mellon, and BNP Paribas, the SWIFT network transitioned into its production deployment framework. The core engine driving this change is Chainlink's Cross-Chain Interoperability Protocol, CCIP. Instead of forcing 11,000 highly conservative banks to completely overhaul their legacy IT systems, replace their compliance software, or directly hold volatile private keys, SWIFT is utilizing Chainlink as an abstraction layer middleware. This allows a commercial bank to attach secure blockchain wallet addresses directly to standard payment messages. A financial institution can initiate a transaction from its existing desktop interface, route it through SWIFT, and have Chainlink safely execute the data transfer, sequencing, and clearing across entirely separate private or public blockchains. The market is treating Chainlink like a simple data oracle for DeFi protocols, completely oblivious to the fact that it has become the definitive bridge enabling traditional banking systems to execute tokenized subscriptions, redemptions, and cross-border value transfers at scale. The legacy walls didn't reject the technology, they silently absorbed it. The plumbing has been updated while the retail public is still arguing over chart patterns. If you think this architecture is still confined to theoretical white papers, you need to look at the massive development that just broke out of Europe and Asia, the official launch of Project Pangea. This is where the direct, cross-border velocity of capital leaves the legacy system completely in the dust. Project Pangea is an active operational alliance consisting of 47 massive commercial banks across Europe and South Korea. This includes Kivalis, a prominent euro-denominated stablecoin consortium backed by 37 European banking institutions, alongside Unique, a powerful South Korean alliance representing more than 10 major commercial banks. Together, this single coalition commands over $10 trillion in aggregate assets under management, focusing directly on the massive $150 billion Euro-Korean One Trade Corridor. Right now, traditional foreign exchange FX settlement operates on a standard T+2 cycle. It takes 48 hours for money to clear, introducing massive counterparty risk, settlement friction, and trapped liquidity. Project Pangea is using Chainlink's on-chain infrastructure to run atomic, real-time T+0 settlement using regulated euro and one-pegged stablecoins. The genius of the architecture is that it acts as clean middleware. The member banks continue using their trusted SWIFT and ISO 20022 messaging standards, while the actual instantaneous settlement executes on-chain via the Pangea L1 network. At the exact same time, look at legacy money transfer giants like Western Union. Recognizing this massive shift toward on-chain efficiency, they've bypassed old clearing systems entirely to launch specialized digital asset transactions on high-throughput networks like Solana. Traditional finance isn't fighting crypto anymore, they are racing each other to build on top of it. But the signal cuts even deeper. The absorption of the global financial system doesn't stop at international bank messaging or real-time foreign exchange stablecoin rails. Chainlink has quietly positioned itself as the underlying data layer for the complete tokenization of the United States stock market. As major institutional asset managers aggressively transition real-world assets, RWAs, including corporate bonds, treasury bills, and equities into tokenized formats, they require accurate, tamper-proof, real-time valuation updates. A tokenized asset on a blockchain is completely useless if it doesn't know its real-time price on the physical trading floor of the New York Stock Exchange. Chainlink has systematically stepped into this vacuum, acting as the absolute verification layer. This brings us to the ultimate structural disconnect. Chainlink's native asset has been a publicly traded token that anyone on Earth could buy on the open market since 2017. For 9 years, it sat in plain sight. While retail investors were chasing highly speculative, inflationary meme tokens with zero utility, global central banks, trillion-dollar asset managers, and 50-year-old financial messaging monopolies were quietly selecting this exact network to serve as the definitive foundation for the future global tokenized economy. The institutional elite didn't build a new, private, closed-source internet for money. They chose the public architecture that had already proven its security over nearly a decade of continuous live operation. Let's bring it all home to the definitive structural layout of the global banking system's hidden integration, the architecture matrix. Global bank messaging, SWIFT. Foreign exchange, Project Pangea. Capital markets, tokenized U.S. equities. So, what is the definitive playbook for navigating this historic capital realignment? The signal is clear. The window for early positioning is closing at an accelerating rate. The average investor operates under the severe logical flaw that they should wait for the mainstream media to explicitly declare a trend valid before deploying capital. But in global macro finance, by the time an institutional integration is common retail knowledge, the structural premium is completely gone. Your playbook is absolute. Align your portfolio with the structural primitives chosen by the infrastructure providers. Stop letting the short-term transactional volatility of speculative tokens distract you from the foundational network sitting directly underneath the banking system. The plumbing of the world economy has been permanently updated. Understand the plumbing or remain the liquidity. Stay sharp, stay focused. That's it for this high-stakes institutional edition of the Signal and Noise podcast. Do me a quick corporate favor and smash that like and subscribe button right now to protect your capital from the mainstream media's blind spots. Keep your eyes on the structural rails, follow the deep institutional data, and we'll see you on the next block.